What's the pulse of AI right now? We're talking major moves from OpenAI, industry titans clashing, and a deep dive into whether this whole AI boom is about to pop. From global competition forcing groundbreaking releases to unexpected praise amidst fierce rivalry, we're unpacking it all. Plus, we're diving into the financial forecasts that could shape your investments. Stick around, because you won't want to miss these critical updates. Let's get into it. First up, OpenAI's surprising open-source strategy and the global forces pushing them to the edge. Then, a surprising twist in the Elon Musk versus Sam Altman saga, and hear what Wall Street is saying about the AI market's future. Plus, we're breaking down the opposing views on whether AI is a bubble or the start of a new tech bull market. You need to know this. Hit that subscribe button and the notification bell so you don't miss a single update. China's AI push forces OpenAI's hand, the DeepSeek effect. OpenAI's recent decision to release its first open-weight models since GPT-2 marks a significant pivot, driven by intense global competition. With Chinese AI firms like DeepSeek rapidly advancing and open-sourcing their models, OpenAI CEO Sam Altman has admitted that the specter of being left behind by Chinese innovation was a major catalyst for their own open-source strategy. It was clear that if we didn't do it, the world was gonna head to be mostly built on Chinese open-source models. Altman stated in a recent CNBC interview, highlighting that this competitive pressure loomed large in their decision-making, though it wasn't the sole factor. Altman also expressed skepticism about the effectiveness of U.S. export controls on advanced semiconductors, suggesting that such restrictions might not prevent rivals from developing their own advanced technologies or finding workarounds. The competitive landscape is heating up, with companies like Alibaba releasing their QN models under permissive licenses, and Meta continuing to push its Llama models through community licenses and direct integration into its platforms. Earlier this year, DeepSeek's AI models demonstrated performance comparable to leading models from OpenAI and Google, achieved at a significantly lower cost, challenging notions of American dominance in the AI race. This competitive pressure extends beyond open-source models. OpenAI also recently launched its GPT-5, touting enhanced accuracy, reasoning, coding, and multimodal capabilities. This launch also led to the deprecation of older GPT and O-series models for free users, while premium subscribers retain access. The global AI race is intensifying, with open-source contributions becoming a critical battleground, and OpenAI's move signals a strategic response to maintain its leading position amidst burgeoning international innovation. Industry analysts are closely watching how this open-source approach will impact the broader AI ecosystem and OpenAI's own commercial strategies, while users anticipate the performance and accessibility benefits of these new models. But how does this global competition stack up against the internal dynamics within the AI elite? Get ready for a surprising development in the ongoing saga between Elon Musk and Sam Altman. The AI hallucination paradox. Musk praises GPT-5's "I don't know." In a remarkable turn in the ongoing public discourse between tech titans, Elon Musk has offered praise for OpenAI's latest GPT-5 model, specifically highlighting its ability to admit when it doesn't know an answer. This comes after a period of public sparring between Musk and OpenAI CEO Sam Altman regarding the trajectory of AI development and the capabilities of their respective models, Grok 4 Heavy and GPT-5. Musk, in a response on X, described a GPT-5 thinking model's admission of uncertainty, short answer, "I don't know, and I can't reliably find out," as impressive. This capability directly addresses one of the most significant challenges facing large language models, LLMs, the tendency to hallucinate or generate confident-sounding but incorrect information. By openly acknowledging its limitations, GPT-5 aims to build user trust, mirroring how humans often value experts who admit when they lack knowledge. OpenAI claims that GPT-5 significantly reduces hallucinations compared to its predecessors. The model employs a dual-component system, a standard model and a GPT-5 thinking model, with a router dynamically directing queries to the appropriate component. Despite these advancements, the model still exhibits a hallucination rate of approximately 10%. Even ChatGPT's head, Nick Turley, has cautioned users against relying on it as a primary source of information. Turley elaborated in a conversation with The Verge, emphasizing the critical distinction between reliability and absolute certainty. Until I think we are provably more reliable than a human expert on all domains, not just some domains, I think we're going to continue to advise you to double-check your answer, he stated, suggesting that users should continue to leverage ChatGPT as a secondary opinion rather than a definitive source of facts. This development is particularly interesting given Musk's earlier assertions that his Grok 4 heavy model remained competitive despite GPT-5's release. This admission of uncertainty by an AI model is being seen by many as a crucial step towards greater transparency and trustworthiness in AI interactions. While the AI models themselves are evolving, so too is the perception of the market they operate within. Prepare for a look at what Wall Street thinks about the current AI landscape and whether we're heading for a boom or a bust. Is the AI market in a bubble? Altman says yes, Wall Street debates. OpenAI CEO Sam Altman has voiced concerns that the artificial intelligence market is currently experiencing a bubble, a sentiment that has ignited a significant debate among Wall Street analysts and investors. Altman expressed his view that while investors may be overexcited about AI in the short term, the underlying technology remains fundamentally transformative. Are we in a phase where investors as a whole are overexcited about AI? My opinion is yes. Is AI the most important thing to happen in a very long time? My opinion is also yes, Altman reportedly told reporters. This perspective comes at a time when major technology stocks, particularly those associated with AI development like Microsoft, Alphabet, and Meta platforms, have posted robust earnings and committed to substantial future investments in AI infrastructure. These investments are not only boosting company revenues, but also driving productivity gains and improving profit margins across the corporate world. The S&P 500 has seen a massive market capitalization gain this year, with the Magnificent Seven group of tech giants contributing a significant portion. Valuations for these companies are notably high, with many trading at forward-price-to-earnings ratios well above the S&P 500 average, including NVIDIA, Microsoft, and Amazon. Some analysts, like Steve Sosnick, chief strategist at Interactive Brokers, warn of the risks associated with such high valuations and potential market overcrowding. He likens the situation to an overcrowded building, where a sudden shift in sentiment could lead to a rapid sell-off, causing significant losses for those unable to exit quickly. However, not all market watchers share this cautious outlook. Richard Saperstein, chief investment officer at Treasury Partners, believes that large-cap technology stocks will continue to lead market performance, driven by ongoing earnings growth, reinvestment of cash flows, and expanding global footprints. He advises investors to remain invested in U.S. stocks, with a concentration in these dominant tech players, citing potential tailwinds from deregulation and onshoring. The broader economic environment adds another layer of uncertainty, with recent disappointing jobs reports and rising inflation, alongside the potential impact of tariffs. Investors are closely watching upcoming Federal Reserve statements for signals on monetary policy, which could further influence the trajectory of highly valued tech stocks. The divergence in opinions highlights the complex interplay between rapid technological advancement, investor sentiment, and macroeconomic factors shaping the current AI investment landscape. Market sentiment remains divided, with some seeing sustainable growth and others warning of an impending correction. But what happens when these forecasts clash at the highest levels of industry analysis? Get ready to hear directly from a prominent analyst who has a very different take on the AI market's future. AI bull market ahead, Dan Ives counters Altman's bubble fears. Wedbush Securities analyst Dan Ives has directly challenged OpenAI CEO Sam Altman's assessment of an AI bubble, instead forecasting a robust and sustained tech bull market for the next 2 to 3 years. Ives views the current AI surge as the dawn of a fourth industrial revolution, arguing that its long-term impact is being significantly underestimated by the market. My view is that the next 2 to 3 years will be a tech bull market, Ives stated on CNBC, dismissing the bubble narrative as being in the second inning of the game. He points to escalating enterprise adoption and surging demand as evidence of a fundamental, rather than speculative, market shift. Ives noted a significant increase in observed demand, stating, "What I see on the public side, I see ultimate demand that's 30–40% more than I saw 3–4 months back." He identifies this as transformational capital expenditure that truly defines a new industrial revolution. According to Ives, recent corporate earnings serve as a validation moment for AI, suggesting the market is underappreciating the full scope of this technological transformation. He anticipates the next phase of growth will stem from second-third derivatives across software, cybersecurity, and autonomous technologies over the coming 12 to 18 months, concluding, "I think the investors are actually underestimating where this tech market's going." This optimistic outlook starkly contrasts with Altman's view that excessive investor excitement is creating a bubble, akin to the dot-com era. Ives recently updated his AI Revolution ETF, IVES, by adding cybersecurity leader CrowdStrike Holdings, gaming platform Roblox, energy giant GE Vernova, and cloud provider Nebius Group, while removing Adobe, CyberArk Software, and Elastic NV. The IVES ETF has shown positive performance since its launch, outperforming broader market indices like the SPDR-S and P500 ETF Trust, SPY, and Invesco QQQ Trust ETF, QQQ, in recent trading sessions. The ongoing debate between Altman and Ives highlights the deep divisions in market analysis regarding AI's future potential and valuation, with significant implications for investors navigating this dynamic sector. This clash of expert opinions underscores the uncertainty and high stakes involved in predicting the future of AI investments. We've covered a lot of ground today, from global AI competition to market forecasts. Stick around for a quick wrap-up of all the key stories and how you can stay updated with ChatGPT insights. And that's a wrap on today's essential AI updates. We saw how global competition, especially from China's DeepSeek, pushed OpenAI towards open-sourcing its models. Then, Elon Musk surprisingly praised GPT-5's honesty about not knowing answers, a big step against AI hallucinations. We also heard Sam Altman's take on an AI market bubble, contrasted by analyst Dan Ives' bullish forecast for a sustained tech bull market. Don't miss out on any of these critical developments. Like this video, subscribe to ChatGPT Insights for more deep dives, hit that notification bell so you're always in the loop, and let us know your thoughts in the comments below. Follow us on social media for real-time updates. We'll see you in the next one.